Hey, it's Clay Trader. This will be a video chart on ticker symbol NWBO. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks, as they're called, representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Don't mean to state the obvious or rub salt in anyone's wounds, but pretty rough day. Although from a trading perspective, it creates an interesting setup. And, the setup revolves around the price and the bulls showing some signs of strength via going sideways. Now, that may not sound like much, but if you've been trading long enough, I'm sure you've seen a stock where it gaps down, and then after the gap down, it just continues to drift further and further and further downwards throughout the course of the day. But that's not what happened here, right? The price did go sideways. Now, you may be saying, well, geez, Clay, that's setting the bar kind of low to just say that simply going sideways, it was bullish action. Well, true, but that's why you got to keep in mind the context. Not only was the context a gap down, the context was also an opening 30 minutes where the price really got beat down and continued to beat down. So for the price to, start to level off, that is a sign of strength. Now, don't get me wrong. There's no such thing as a guarantee in the market. So just because the price went sideways after getting beat up does not mean that this is for sure the bottom and that on Monday this thing's going to be up at 45 cents. I'm not saying that at all. I'm just saying it is very interesting and it's very logical to think and question, hey, maybe the bulls are going to try to build some sort of base here and create at least some sort of dead cat bounce. In regard to this whole bottoming out action and really brings about the level of support to keep an eye on, I'm going to call right here at about 23.5 cents. So if the price can't hold above 23.5 cents, at that point, it would not be shocking at all to see the price go down there and retest those lows, if not drift, further. But as it stands right now, after that opening 30 minutes, 23.5 cents did do a good job of supporting the price. Hence, it is a level of support. Now, what about areas of resistance? Like I said, if this price is going to get some sort of bounce underway, where's a couple hurdles that the bulls are going to need to clear? First key hurdle is going to be right up here at the 25-cent mark. And to me, 25 cents is kind of the no excuse level. I mean, if this is going to get any sort of bounce at all, then 25 cents is going to need to be broken. Really no ands, ifs, buts about it. If the price can't even get above there, then the price could very well just stay within a range. And not necessarily saying in a range is a bad thing depending on your strategy and perspective, but as far as, the price generating enough interest and hoopla to bring in more eyeballs because, hey, this thing is bouncing, 25 cents is that level for me. So big volume in it today. We'll have to just sit back and see how this all unfolds on Monday. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good weekend.